All right, y'all, back to work. NVIDIA earnings are behind us, and now the dust has settled, and there are three very simple setups we're tracking for tomorrow. I've definitely got my favorite out of the three, but if we time this thing right tomorrow, any one of these setups could make our entire month. End of the month's on Friday. We got bills to pay this week, so enough of the intro. Let's get this party started and go make some money on what should be a very fun, busy Thursday morning in our trade room. S&P SPY's ready to go tonight. Nasdaq triple Qs are all ready. I've got three very simple but very important clues on the charts tonight that are telling us where I think the money is made tomorrow morning. One of those three clues is right here on these hourly charts. We talked about this last night, this beautiful range on the S&P right now, up and down. We know ranges love to rotate, and we're expecting these buyers to be trying to rotate back to the high of that range again. Over in the Nasdaq right now, that beautiful, wide, bold channel we're watching right now on the hourly. Again, the bears have a lot of momentum right now, but we're expecting that rotation coming off that low we talked about last night, that beautiful symmetrical pullback after that deep seek drop we saw a few weeks ago. So make no mistake about it, the bears have all the control of momentum right now, but whether it be the low of that big wide range or the low of that big channel, we are anticipating now these buyers are going to be trying to rotate back higher off of those lows. Just a matter of trapping in some bears at this point. So that is one of three clues for tomorrow. A second clue on our radar for tomorrow is over on the schedule tomorrow. And no, it's not the durable goods or the GDP or the jobless claims tomorrow, although those are big news events. That GDP report and durable goods orders are very big news events tomorrow. I don't think that is the biggest clue for tomorrow. I think the biggest clue for tomorrow is actually the news coming out on Friday. That personal income number, remember, that's the Fed's favorite gauge of the real cost of inflation. So that tells me that we have NVIDIA earnings behind us tonight. I wouldn't be surprised if markets go into the fetal position into a big range tomorrow morning as they wait for that big number on Friday morning. Keep that in the back of your mind. That's a second big clue for tomorrow. Now back to our charts though, because the money is made on the charts, of course. Let's now go to the third clue. First clue were these big ranges on the hourly chart. We're not going to trade the hourly chart. Let's drill down to some tick charts here right now, because the third clue, and what might be the most important clue, is on these tick charts. Now, as always, guys, I use tick charts because tick charts make pattern recognition a hell of a lot easier. All the time frames you'll need in the upper left-hand corner there. And if you're watching for the first time right now, by the way, that is the 21 EMA. It is pretty much the only indicator you need to make money consistently. There's one really big clue here on these tick charts. That is multiple trading ranges. We had a bull move up into a range higher and a bear move down into a range lower. Now, why is that an important clue? Well, think about what we've talked about so far this week. Anytime we see a bull move up into a range, what do ranges do? They rotate going higher. Bull move up into a range. What do ranges do? They rotate going higher. So we know now that this bullish range going higher here, it wants to rotate off that low and probably punch their ticket around that prior week close into the end of the week, end of the month. But hold on one second though. Hold on, back up the truck, because now we have that bear range. What do bear ranges like to do? Yeah, they love to rotate. Absolutely. Ranges love to rotate. Down, up, rotation back and forth. When I see stacked ranges like this, range up top, range down bottom, there are three types of scenarios, setups I'm tracking for tomorrow, and we're going to go over those here tonight on this video. That way you have a game plan to make some money tomorrow as well. The first things first is, whenever we see ranges like this, stacked up like this, the way the markets work is they're going to try to fill in that empty space in between. Remember that PCE, that personal income number on Friday? I would not be surprised if we see a big range form in between both these ranges for tomorrow. Now, this would be very easy. This is an easy scenario to make money. We're going to talk about that in a moment, because that will be an easy one to make money tomorrow into Friday. Another scenario I'm tracking for tomorrow is that trading range and that rotation going higher. That is a second game plan. That can be tricky because we don't want to chase it going higher. So we'll talk about that more, go deeper here. I'm going to give you guys some good entry tactics if we do see a squeeze running higher. My favorite though, and the third scenario for tomorrow is please, if the trading gods are watching down on us right now, I hope we rotate down, back up again. I would love to get some bear traps down there for tomorrow. Now, there are 3, maybe 4 different ways, because, bear traps come in lots of shapes and sizes. There are 3, maybe 4 ways we can time that perfect bear trap down there. I want to talk about that a bit later on this video. Right now, though, let's talk about that squeeze going higher. Let's talk about how we fill in this area in between. For example, as we go higher here right now, if we go higher here right now, I've got to be careful because we're probably going to see some bears coming in and trying to hold the underbelly, right, of that trading range. Ranges love to break out pullback. We talk about that a lot on these videos. So if we do end up going higher here, the trick I'm looking for is this sequence. First things first, I'm going to want to see separation off the moving average. The key to knowing when you can get aggressive and start buying pullbacks is when the pullbacks to that 21 EMA, when they start to separate off that moving average. Remember, separation equals strength. So one trade I'm watching for, if we do start to squeeze higher here is a higher high in price and that low in between. When that happens, we can then use a simple bear trap pattern like I teach in our video classes. Below that low, nice strong green candle, closing back above that moving average. Now remember, these breakout legs, they love to complete measured moves, so keep that on your radar for a target. Now, at this point here now, this range below us is begging for a breakout pullback. I want to see a 2-legged pullback. What's a 2-legged pullback? It's just like it sounds. One leg, get below the moving average. 2-leg, think about a measured move, A, B, C, D. If we're lucky, that 2-legged pullback will line up right around some of these prior highs, right? Any of these prior highs can be used now as support. Now remember, I'm not in the business of picking tops and bottoms. I'm not going to blindly buy that pullback. The goal now will be to trap in some bears here. Use a bear trap. Bears once, bears twice. Why twice? Because I want their pain, right? I want their stops. If you're caught short and you get stopped out, right, you're buying your way out. I want 2 tries here. 1, 2 tries. We call it the 2-try rule in our trade room. And then where's the market want to go? With all that momentum, it's going to want to go back and punch its ticket back up to retest that high. On the way back to retest the high, this is where we use that same entry pattern we mentioned earlier. As it goes higher here, I want to see strong move up. Remember, separation. Separation might be the easiest clue you need to know when to add to your winner. If you want to make more money, guys, add to your winning trades. It's a bear trap and an add-on as we finish up that move going higher. So again, if we do see that squeeze running higher, I'm getting in under prior swings. I'm getting in on 2-legged pullbacks, bear traps, add-ons as we go higher. There's one other variation of this, and again, I will talk about here if we go lower here in a moment. So don't you dare click off this video. We'll talk about that here as soon as possible. We may also see this pop up and begin to grind going higher. Remember, anytime we see a grinding market, whenever markets grind higher, it's very difficult to stop that freight train of momentum. What I'll do in these cases is, if it grinds higher like this, it's very simple. Mark a trend line off the highs, anchor that trend line down off some of these prior lows like that, then look left, find one of these prior swings, and guys, this is where the money is in these scenarios. Nothing's ever guaranteed in trading, but this is almost about as close as a guaranteed winner you're going to get. And again, don't forget, right? We're not going to blindly buy that low. We're going to look for that same 1 try, 2 try, bear trap. And as it runs higher, remember, separation, higher high in price, that tells you now to add to that winner. Now, one cool thing about these pop and grind markets is the pop leg is the measuring leg. Once we know how big the pop leg is, then we know how big that measuring target is. Want to make more money? Get better at holding on to your winners. Now, I have a couple more variation of these I want to talk about. I want to make sure we have a game plan to make money tomorrow. But before we do that, though, let's slow down for a second, because I know most folks watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new strategy. Don't you worry. I teach this entire roadmap, this entire system. In fact, I have a ton of examples of bear traps, add-on trades, breakout pullback trades, two-legged pullbacks. Guys, I want to help you time better entries, start making more money in your trading. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room each morning that literally tells us exactly where to find the winning trades each day. More importantly though, I want to teach you my 4 favorite entry setups. They're price action setups so you can time better entries, make a lot more money, guys. The markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, what are you waiting for? Hit that link that popped up there. Take that free trading course. Everyone loves all the trade examples I share in that short video course. The best part is it is 110% free for you. Also, too, guys, keep in mind too, I'm going to put all the important links you'll need to learn the game plan, see a ton of trade examples, and start making more money. I'll put all the links you need in the description of the YouTube video. Start first on that free video class. Most folks start making money all on their own, all from that free video course. So start there first. And don't forget too, if you're on Twitter or X, I post a ton of updates throughout the day on Twitter X. Give me a follow. Again, all the details you'll need, guys, to learn more, learn the entire roadmap, and hopefully earn a lot more because of it are linked up for the description of the YouTube video. Now, I want to talk about that third scenario, that bear trap down there. I will talk about that here in a moment, but we've talked about one scenario so far. We've talked about this squeeze running higher. What if we end up filling in this area? Again, this might be not the biggest money to make this week, but might be one of the easier ways to make money tomorrow. For example, there's a very good chance here we wind up popping up and going into a range right in the middle. Remember, we got big personal income number on Friday, so don't be surprised if this thing's all chopped up in a range. Now, I said earlier, this is probably the easiest one to do, because if we pop up and go into a range up here, what do ranges do? They love to rotate back and forth. The size move above, the size move below, above. We use things like expanding triangles, back and forth like this. I get excited about these because these are really easy to make money with, right? So ranges, they love to rotate. Now, at this point, this will be a bullish range, right? A bullish range. So as the market rotates back and forth like that, we're going to try to pick off those bottoms, right? Now, how do we do that? Do we blindly buy it? No. Do we use divergence or order flow or tape reading or no. You've learned by now that stuff doesn't work enough. It works every once in a while, but not consistently enough. What I do is, in our trade room is, and I find this the easiest way to make money consistently over a long period of time is to look for traps, right? So as it rolls lower, we're looking for that bear trap, right? That bears once, that bears twice. Again, why twice? I want those stops. I want those stops. And as it runs higher, what do? We add on, right? Bear traps lows and add-ons. Higher high in price, separation off that moving average, get below that low, add-ons. Remember, the amount below the range, the amount above the range, that tells you now where the market wants to go. Bear traps and add-ons as it rotates. Promise me though, you're not going to make this rookie mistake. What happens a lot of times with new traders is they see the market go higher like this and they chase after it. Now, how do you know when a breakout is successful? How do you know when you can trust a breakout? Remember, it's separation. So if it breaks out, pulls back and starts separating off that moving average. And again, when I say separation, think about those pullbacks, right? The pullbacks are not pulling back to the moving average. When that happens, now you know it's breakout pullback time, right? It's breakout pull. Well, basically, it's two-legged pullback time, breakout pullback, bear trap, add-on, bear trap, add-on. Okay? What happens a lot of times though is we see a range up here. Rookies aren't paying attention, right? It breaks out and they get head faked. They get bull trapped up here and it rolls back down again. Here's where things get tricky. That rotation off the high, I'm warning you right now, this will feel like a reversal. It will feel like a reversal. And every inexperienced trader will try to come in and sell that pullback right there. I'm telling you right now, do not sell that pullback because now you know this is a range rotation. Okay, you be the one doing the trapping. So when the rookies come in and try to short this thing because they see all this rotation off the high, you now know better. Let those rookies commit and then squeeze those stops back up again. And again, as we now rotate, remember, add to your winners, add to your winners. And I know it's tough at first because when you're new to this stuff, you're not quite confident in your systems yet. But trust me, once you see a couple dozen of these range rotations, especially with us in our trade room, you'll get very confident in the bear trap down here, even more importantly, in adding to that winner. That is where a small winner becomes a really large winner when you double and triple up your position size on that add-on. And because we know how ranges work, the amount below the range, the amount above the range, it's not easy to hold your runners at first. But once you learn how ranges work, once you see these work over and over again with us in the trade room, trust me, you'll be a whole lot easier to leave a runner for that pendulum swing. So again, this is the scenario where if we start to fill in that gap in between those two, I think this is one of the easiest ways to do it. It's those bear traps, it's those add-ons. And again, be very careful about buying high up there if it bull traps off that high, and do not take the bait, right? Don't take the bait as it runs going lower. All right, that is 2 out of the 3 scenarios we're game planning for tomorrow. Now, how do we trade as we go lower here? Let's go grab a look now at the Nasdaq, because the Nasdaq's getting lonely over here right now. I love this 60-minute time frame on the Nasdaq. The channel is beautiful. I love that symmetry move off the deep seek freak out we saw a few weeks ago. The markets love to overreact to everything right now. It's just part of this new president. We got an inflation battle we're hitting through. So anyways, now before I dive into the tick charts right now, if you're enjoying this video, please help me grow this channel by hitting that like button, will ya? And make sure you subscribe, because YouTube rewards me every time you like, share, and subscribe to this channel. I get it. I know we're busy people, and I really appreciate you spending a few valuable minutes with me here every evening on these videos. So thank you so much for all the ongoing support. Now, let's roll our sleeves up here and get dirty here on the Nasdaq here. Down to our tick charts. Again, we're not going to trade off time charts. Get off the time charts. Time charts make pattern recognition a whole lot more difficult. Tick charts are based on volume. One tick is one trade. They make everything easier. Get yourself some free charts over at ninjatrader.com, and you'll see what I mean here. Over on the Nasdaq right now, same basic idea, right? 2 ranges: bull range up, bear range down. All right, we talked about earlier here, what do bull ranges do? Bull ranges, they love to rotate, right? I'm not making this stuff up, guys. You'll see for yourself here once you start paying attention. Bull ranges, they love to rotate, right? Just as we saw earlier on the S&P. So we talked about how this bull range, if the buyers are lucky tomorrow, they'll squeeze this thing and rotate this sucker going higher, right? And it will take those highs out overhead here. What oftentimes happens, though, is when there's a bull range up, a bear range here, we're going to wind up filling in this gap area here right there. And again, look for those bear traps and those add-ons, like I mentioned earlier, and be very careful buying high, right? Be careful chasing after it unless we see what? Unless we see some pop and some separation. Once we start seeing that pop and separation, bingo, right? It's money time for the buyers on the breakout pullbacks. Now, let's now talk about, though, again, I think the biggest potential winning trade tomorrow into Friday could easily be that rotation back down again. It's a bear range. Bear ranges love to rotate. And again, when you understand where we are, on the bigger picture chart, we're not going to use that for entry techniques. We're going to use that for, well, overall direction. And more importantly, we know right now it's very difficult for sellers to justify being a bear down here. It really is, right? So back to our tick chart right now. As we go lower, what's my problem? What's my problem? My problem is momentum. Remember, guys, there's always a problem, okay? In our trade room, we talk about how there's always a problem. The problem is either momentum or its location, right? There's always a problem, okay? There's no free lunch. There's no perfect trade. You're always trading off momentum or location. Is this a good location to be Of course it is. It's a great place to be a buyer. But what's the problem though? Momentum. Right? As we roll lower, we're very bearish on the hourly. We'll be bearish here on the tick charts as well. So if we do end up rolling lower here, I do not want to pick that bottom. And also, too, I have to be prepared for we may pop up and try to do it again. Right? Okay? All that momentum, as we go lower, I can't be too aggressive. And again, as it runs up, they may try to do it again. Right before they run this thing back up again. That is what momentum tells me. So knowing that right now, as we go lower, I'm going to look for ways to trap in some sellers. Look back over here, for example. Look what happened, right? They run lower, they pull back, bears once, bears twice. There is that bear trap pattern, right? These patterns happen over and over again. We run lower. We wait for the pullback to the moving average. We let the bears try twice. Why twice? Remember, higher high in price. Why higher high? Because sellers want to sell high. So as it goes higher, we're roping in more bears. More bears mean mass stop losses, right? Mass, whatever you want to call it, right? More stops get run. Oh, that was horrible. Sorry about that. That joke on that one. That bear trap. And then as we go higher, I'm going to have some fun with you guys here on these videos. As we go higher, look for that separation. Now, the reason why this could be one of the more lucrative trades of the month this month is because now where does the market want to go? It wants to rotate down, back up again, right? This is why ranges are my favorite, because if you can get a bear trap or an add-on, or if we're lucky, both of them tomorrow, we can rip that thing back higher. And don't forget too, guys, these oftentimes get strung together, right? So it's a bear trap going higher, another add-on, as we go. There's no reason why you can't hit that add-on button twice, right? Bear trap, add-on, add-on. The key is as we go higher, you have to be buying as low as you can. And we talk about these bear trap and add-on entries in that free video course. You want to add on underneath prior swings because you want to buy as low as you can, right? Okay, so that's one way to do it. Now, a lot of times, guys, we don't get that bear trap down there. Sometimes we don't. Sometimes we'll get a big run lower. It'll just whoop and run right back up again. And I don't get a chance to bear trap. If that happens, watch for this entry. Very important, because these are tricky on the emotions. If it V bottoms off that low, it almost always begins to grind going higher. If it grinds going higher, watch this. Draw a trend line off the highs. You know where I'm going with this, right? Mark that trend line off that low and repeat after me. First test is the best test. Again, there's not a lot of guarantees in trading, but these are almost a guaranteed winner. In fact, I have a lot of students who only trade these grinding markets. They only trade when everything starts grinding, right? Grinding. Again, grinding above that moving average. Again, I want that first test. It could be a bear trap. It could be an add-on. It could be both. Any of the entry patterns you guys are learning inside the free video course. Again, not ideal. I want to buy low, but I don't control the markets. My goal here is to give us a roadmap so we're ready for no matter what these wild markets throw at us for tomorrow, right? We're not here to make predictions. You make predictions, you give yourself one chance to make money. Go over different scenarios, different if-then scenarios. That gives us the tools we need for any job we have coming at us tomorrow morning in our trade room. One of my favorite trades, though, in these scenarios, when I have a bear market like this and a lot of momentum going lower, we oftentimes will get a run down. We'll oftentimes get a bear trap. We'll go 1, 2. In my free trading class, we talk about trade management, right? I use a 1-to-1. So size of the setup, size of the first target. I like to go 1-to-1 target, take quick profit target off, move that stop up to point of entry. Every once in a while, we have all that momentum going lower. We get a nice, easy bear trap winner. But again, ranges, sometimes they hold the underbellies, right, for breakout pullbacks. And we see another leg going lower here. When this second leg goes lower here, it's not a losing, it's a winning trade, right? Because we're gonna move that stop up at that 1-to-1. Now, this is going to feel like a reversal. It's not. It's simply a strong run down, trying to retest before we get that. Remember, it's a bearish momentum in this situation, right? So we have to expect that retest. These retest trades, ask any of my students, they'll tell you the same thing. These retest trades are oftentimes our biggest winners in our trade room. So as we retest that low, everyone piles in on this bear trap, right? Let them try twice. Double bottom retest trades. We call them retest trades in our trade room. Everybody gets trapped off that low, and now we're going in with a bear trap with our add-on and running lower here. So it might be a V bottom off that low. It may be a double bottom, right? A retest trade. Let me call this in our trade room. But remember, keep looking for those bear traps. Keep looking for those add-ons. Keep looking for ways to trade, right? To trade this rotation. One last variation. We'll wrap things up here for tonight. I love the idea of running lower, trapping the bears in. What if we don't? What if we don't? What if we went higher and then came back right below that little low right there? What if all we got was a shallow pullback right there? Well, how is location now? Remember, momentum and location. Okay, what's the problem here? What's the problem right there? It's not momentum. It's location. Why? I'm not buying low anymore. The problem there is location. Great location down here. But if we go back lower there, now momentum becomes a problem. Remember, it's always momentum or location. Momentum is the issue down here, right? Location is the issue on a shallow pullback. So what do we do on a shallow pullback? If you've gone through my video classes yet, you know, right? A shallow pullback, we look for a slight variation of that bear trap, right? It's a bear trap getting in right below that low. Make sense? Always a higher high. So again, we run lower, we bear trap. I'm not worried about buying too high right now. My risk reward is fantastic on that trade, right? Because of that, I can buy as we go higher. But if I don't have that bigger move down, if I simply see a shallow pullback, like underneath one of these prior swings, for example, now I do have a problem with risk reward ratio, and I need to buy as low as I possibly can, get in underneath that low like that. Same thing, right? Same one try, two try. I'm trying to squeeze those stops. But again, I want to buy as low as I can because location is the issue on that one. All right, guys, a bit more advanced on this one, but don't worry, tomorrow morning, we'll do it all together in our trade room. But that is the game plan for tomorrow. 3 scenarios, getting prepped up for tomorrow. Again, any one of these could easily make our entire month as the month comes to a close on Friday afternoon. Now, don't forget, guys, tomorrow morning, 8 o'clock Eastern time, the place to be is in our trade room. The easiest way to start making money in these markets is to learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to learn the game plan, time better entries, make more money. Again, start first on the free video classes, enjoy all those trade examples, then come join us in the trade room and we'll do it together in the morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will you? Make a ton of money for me tomorrow morning. And as always, you better be here next time. Adios, amigos. Bye for now.